I shorted 50 ITOT when it approached the McClellan breath oscillator to 0, 10, 20 yesterday, and then had to look to see where my pain threshold was, and it was right here at the conversion line. And as soon as it ticked higher than 18905.55, I jettisoned all 50 for a $7 loss. And as we see, ZIG ZAG has definitely had its swing point to the downside, and we'll get a swing point back to the upside anchored here at D wave up wave 2 where it printed, and D wave down wave 1 where it printed. When we get a couple more higher lows, this one really put the kibosh on having the swing point here. So let's see if we can get 2, 3 higher lows the next 3 days in a row, and this will have the swing point more than likely. And there's a lot of clear space on this chart between closing price and the channel 3 high, Bollinger Band upper band, and daily starc upper band, so somewhat of a ceiling forming there. You would have to really push the envelope up to get this going to the upside again. The channel 3 high and Bollinger Band. Starc band is already headed up that way, but that's what the starc band does. And I don't even know if I've ever talked about the mid starc bands. You can see the daily and the weekly mid starc bands are here, so anything under the starc bands, and ideally both weekly and daily, is a buying opportunity. What I do is I look for formidable support where there's a lot of levels together, somewhat like those bands we just looked at, and that's a good buying opportunity for low risk entry on longs. So that's how you game these mid starc bands here. And we look for them bunched together except for reference point only levels. So if they're bunched in with the other ones, that's good, but we don't count on those to hold support or break resistance. And here's those levels up here: daily upper starc band, daily upper Bollinger Band, channel 3 high here. So you can see there's some other levels in between. Here's that extension for the broadening top, and then close to the upper starc band is the daily aggressive combo sell risk level, and bottom of uptrend channel C. And that recent lower low ticked below this horizontal support and resistance line here, pretty much nailed the weekly sequential sell risk level and popped back up. So that's what I mean by formidable support and resistance. And until these become qualified and confirmed, along with the other sell risk levels that price is about to hit, look at them all here. One here, this is a formidable resistance area here. Look how far back it goes, 22 for the daily relative retracement up, and tick higher than this D wave down to where it will print at 19092.99. So if it ticks higher than that and stays below this level where the D wave up wave 5 will shift for the weekly and the daily up 3 prints, and if it doesn't do that and starts ticking back to the downside, then ZIG ZAG will be anchored at the down wave. So that will be a paradigm shift there. And then you could see that they're all bunched together in price. So when they're spaced out like that, pretty close together, that's even more formidable resistance or support. When they're all bunched together, then it's easier to jump over. So one hits, and then it's got another river to cross, and then another one, and then another one, and then another one. And you can see all the sell risk levels and retrace up levels. So those are definitely formidable support and resistance, and it's got a lot of them to go through. And with two greater Hindenburg Omen signals being triggered recently, we're not buying any longs, and we're looking for shorting opportunities. So let's see if it can make it past this daily sequential sell risk and this daily relative retrace up level, kind of close together here like that. And then let's see what happens there. There's a daily pitchfork level right there, and the weekly ascending broadening top. I mean, you can see it. So if it starts struggling to get past this, and it actually prints the D wave down 2 for this daily and starts heading down, then we got a little bit of trouble going on. And again, could be a low risk shorting opportunity. And the Fed decision is on the 18th of September and press conference, so there's still a long ways to go between now and then. And it ain't easy getting levels qualified and confirmed, either upside, downside. You can see, I believe, that daily relative retracement could have been qualified and confirmed. You can see the up close, followed by the down close, followed by the up close above the levels in question. And the NYA almost always opens where it closes. So after the 15-minute lag, if there's a tail like this to the downside, so it opened and then went to the downside and then to the upside, so that's pretty much a given that they're counting that as a gap down here into Mark. So it did not become qualified and confirmed, because it certainly should have if it just opened and then shot up instead of going that tick down or two here. And that would have been this daily relative retracement up 5 going back to October of 2023. And you could see this one goes back to that crash back in October 2022 before we went on a tear in the markets here. So these levels have been hanging around for quite a long time, and the day that they become qualified and confirmed to the upside, and that would be a definite signal that we're headed a lot higher, especially if some of these other ones start getting qualified and confirmed in the daily chart. So this one, weekly, yeah, it's really hard, but let's look down at our feet at these